Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. First, I want to start off by saying what's happening in Eastern Europe is horrible, and I wish that on no one. And I do fear for the safety of everyone in Ukraine, and war is awful. It is never a good thing. So right off the bat, I do want to say that, and I'm praying that everyone in Ukraine is kept safe and away from harm's way. Now, to the market today. It was a wild ride. What started in the market as a no good, very bad day quickly became an epic rally to end the day. We had a 6% swing in the NASDAQ, a 5% swing in the Russell 2000, and a 1,000 point swing in the Dow Jones. A 1,000 point swing. That's incredible. There was a lot of fear in the market this morning that slowly throughout the day disappeared. And this was a total buy the dip opportunity this morning. And then that led the day, especially in mega caps and growth stocks. There are so many stories out there of different growth stocks that just shot up 20% just today from their lows early this morning to where they ended the day. It was incredible. Um, I've got one example to show you on a trade that I made this morning, and I'll talk about that in just a moment. So, who went shopping this morning? It was a good time. The market was oversold, and the market had been going down for several days leading up to the whole Russia Ukraine conflict. And historically, that has been a buying signal. Whenever a war has begun in history, a lot of times a market will go down into the start of it. It will have a big shock and awe at the very beginning, sink down pretty far, pretty fast, and then it'll have a U-turn moment. And ours came quick. I mean, literally this morning to this afternoon, big difference in the market. And if you guys played it really good with the ETNs that I shared with you the past week, almost every live stream this past week, like the SPXS is shorting the S&P 500, a real easy way to do it without using options. Then you were able to swing trade that and do really, really well. At least I took advantage of that. I hope you guys did too. So in yesterday's live stream, I talked about, it's a good time to start building a shopping list. Get ready to go and set price targets for where you want to get in. And it's always a good thing to have ready for situations just like this morning, because you never know when those situations are going to occur. So yesterday I told you about one of the stocks in my top 10 list, and that was Generac Holdings, ticker symbol GNRC. And let me show you what happened with that. Let me get the cursor on the right place. Generac Holdings. We talked about them yesterday. They're in my top 10. I want to own this one. And I told you yesterday that if I could get sub 200, that would be pretty cool, because that would be about a 62% discount from its all-time high. And if I could get sub 175 a share, I would be even happier. And that is, well, let me just say this. Can you guess what happened this morning? Can you guess what price I got in at this morning? How far do you think this went down? Yesterday, this closed at $270.99. I wanted sub 200, or even better, sub $175 a share. Where do you think this thing went this morning? I'm going to go to the 5-minute chart here so we can see this morning. Right here is this morning. It opened this morning at $261. I'm sorry, my apologies. I'm I'm not saying this right. I totally messed up. I totally messed up. on this one. It went from this morning. I can't believe I totally messed up on my numbers here on this one. This morning, it went all the way down to open at $261. And then it closed and it's now above $300. That is a pretty nice move. Now, that was about a 13%, 14% or so swing in that one. Let's go to another growth type stock, Open Door, OPEN. We're still on the 5-minute chart here, so you can see the move here that was made this morning. This morning here, it opened. Let's get it right here. It opened right here at $8.69. That's where it opened, all the way down there. And then it closed all the way up here. That was a 26.2% move. Yeah. And there are all kinds of examples out there just like this one in the market today. So which ones did you take advantage of? That's what I want to know. All right, let's give you a quick overview of the market, and then we're going to talk about Alibaba. I want to do a deep dive on that. It looks like things, troubles for Alibaba are just not getting any better anytime soon. And I'm going to pull up the S&P 500. The ticker symbol is SPX in TradingView. There is a link in the description for TradingView here. This is the 5-minute chart, okay? Now, we had on our daily chart this yellow box here. I've been calling now for a couple weeks 4,200 as the low. And of course, it broke through that in early session before the market opened. And it opened today at 4120.74. 4120.74 is where the S&P 500 opened this morning. And then it rallied almost instantly, and it kind of stalled here right around noon, lunchtime. The market usually does that. If you haven't noticed that, around 12 noon Eastern time, the market a lot of times will take a break, right? It'll flatline, it'll slow down, of course, unless some very specific news comes out. But of course, that's the lunchtime hour on the East Coast, and you see this pattern a lot. This rally in the morning, this cool down around 12 noon on Eastern, and then rally into the close. Now, one thing that I do want to point out though is, and this has been very typical for our market so far this year, is if you notice over here, it's right above my head, right about here, these red candles for volume towards the bottom here, okay? Into the close, the last 10 to 15 minutes, every session, we usually get big volumes of selling. We got that yesterday into the close. We also got that today into the close. The last 2 minutes were seen with big volume candles selling. Because all year, what has the market done? Whenever there's strength in the market sells into strength, right? So we saw that yesterday. The day before, look at that. Another big red candle here, the last 5 minutes of the day. The day before that, the last 15, actually 20 minutes here of the day. Big red candles selling into the close. This is a common theme. It did get bucked right here on February 17th, where it actually closed in the green. But as we continue to go back, there's another red one. And we go back even further, there's a green one. Now, those were the two green ones that we've had here in recent. Red, now we got another green, another red. All right. See, this is a pattern of red closing volume, high volumes closing the day selling. That's the pattern that we keep seeing. The last 5, 10, 15 minutes of the day, always selling occurring. All right, so there's that. Let's go to the daily view here for it. S&P 500 again. So you can see it. It almost got down to 4,100 today. As I said, it got down to it opened at 41.55. It got as low as 41.14 as soon as it opened, and then the rest of the day it just was up and to the right on the charts. Now, all of the major indices ended the day higher. It was pretty amazing watching the Dow as we were getting into the close, right? Watching that thing slowly tick higher, and then it popped green, red, green, red, green, red, and then finally green, and then it started ticking higher. It was really cool to watch that after it had been down so much earlier in the day. But all three indices, they did erase steep declines early in the session, with the Dow closing 92 points higher, a 1,000-point swing. And the tech-heavy NASDAQ, it rose more than 3%. Again, it had a 6% swing too. Big swings. The S&P 500 was up 1.5%. As investors, they were totally assessing the Russia invasion of Ukraine. And, I almost think, well, what were investors thinking about this? Were they thinking, well, you know what? Russia invaded. I guess it wasn't as bad as we thought. So let's buy the dip. The market's oversold right now. Let's buy the dip. I don't know. Maybe that's what investors were thinking. But still, war is bad. War is horrible. War is not a good thing. We don't want to see it, right? We don't want it to happen because we know that people are getting hurt and we do not want loss of life. So I'm not quite sure if investors just saw that the market was extremely oversold. The market had been in a downtrend for several days. If we look at this, we have to go all the way back to February 9th. February 9th. That's when we hit resistance up here at the yellow box here closer to the top up here. When we hit that, and that line is right around, let's see, 45.87, maybe 45.87. Yeah, that would be the top there. That was the last time, February the 9th, that we were up at that top. And we have been dropping ever since. We had a couple days of a bounce on our way down. But the market was way oversold. If we look at where the market was yesterday when it closed, right? The market was at a 31.9 on the RSI, the Relative Strength Index, right? 30 and below is oversold. So the market was 2 points away from being oversold. The S&P 500, which is the biggest chunk of the market, 500 stocks, right? So 2 points from being oversold. And if we look at the money flow index, we were down to a 34.7. So money had been vacuumed out of the market for the past several days, going back really to February the 9th. And so maybe investors just saw that, man, this market is oversold right now. Tech had been beaten down. Mega caps, just the hammer. They just got hammered down. And growth stocks got hammered down as well. So maybe investors decided, well, you know what? The market's oversold. Let's take this trade. And I betcha it's going to be a swing trade. We might have a rally into the close tomorrow. And then maybe the last 15 minutes, we'll see that selling again. Because I don't think investors are going to want to hold a trade, especially a swing trade, through the weekend with the unpredictability that's out there right now. So it is very possible we could continue this rally through to the end of trading tomorrow. And then the last 15 minutes of the day is when it could turn over. And we could see another big tranche of selling. That's a possibility. Okay. Today, President Biden did announce new sanctions on Russia banks and many other sanctions as well for Russia. And said the U.S. would release more strategic oil, but fell short of barring Russia from the SWIFT network, right? That's a banking network for Russia. That would have been a big, you know what, Putin, you made a mistake. You invaded Ukraine. Now you are going to be punished. And that would have been a great way to do it. All right. The most beaten up stocks, like I said, the mega caps and the and growth. In the S&P 500, the information technology sector was up 3.5% today. That one has been beaten down really hard. Communication services up 3.1%. Consumer discretionary 2.5%. Those three sectors helped lift the market into positive territory. The Vanguard, and this is where you can see it, the Vanguard Mega Cap Growth ETF, ticker symbol MGK, it rallied 3.3%. Now, on the bottom end, we had consumer staples, we had financials, we had energy and materials. Those were the sectors, the four sectors that closed lower today. Now, the Russia-Ukraine situation could still get worse, but the comeback in stock prices, the retracement in oil prices, and the decreased demand for treasuries provided investors reason to kind of lighten up a little bit and buy the dip. Okay, let's move to new home sales because we had some data come out today, and I know it just gets buried with all the other important things that are happening. But new home sales decreased 4.5% month over month in January to a seasonally adjusted annual rate of 801,000 units. The key takeaway from the report is the recognition that the lower priced homes, the sale of lower priced homes has decelerated, likely due to less supply and affordability pressures. Yeah, people are getting priced out of buying homes. Rates are going up, meaning your borrowing power is going down, meaning the size home you can afford also goes down. It's not a good situation. And that is leading to actually higher prices. Homes accounting for a larger percent of new homes sold, which is driving up both medium and average selling prices. Okay, here's where we stand year to date in the market. The Dow Jones is down 8.6%. The S&P 500 is down 10%, sitting right there on correction territory. The Russell 2000 is in correction territory, down 11.2%, and the NASDAQ is out of the bear market and back in correction territory, down 13.9%. Now, cryptocurrency, it had a wild swing today, which is nothing new. We're used to that being in Bitcoin and Ethereum, BTC USD on TradingView, and you'll see here the big swing in Bitcoin's price. So let's pull this up. I'm going to go to the 5-minute chart here for today so we can see this. Now, I'm going to go in here a little bit tighter because I want to show you this. So today's big rally, you can see that. There was a big run late in the day on Bitcoin. But if we go back here to the beginning, which is down here where this big red is. See where we're up here right above my head, and then we have a big red candle that puts us into the yellow box here? Yeah, that big red candle was last night when the news started to break, and this was a huge drop right here. see if I can get that lined up. This is a huge, and this 5 minutes, okay? So in 5 minutes, Bitcoin dropped $800 and then it continued falling. And it looks like the low right here is going to come in at 34,322. Is that it? Yep, that's it. 34,322 was the low. And then we actually got to a high greater than where we closed for the day. But we got to a high of 39,720. So if we measure from bottom here to that high, that real top there, that was a 15.6% move today. But if we go to where we are right now, we are sitting at $38,101. That's up 10.8%. So if we go back and look, that's right here on this blue line. And if we go back just a little bit further for yesterday, we let's find it right here. Make it a little tighter. Okay. Just trying to get my lined up. Where's that? All right. So yesterday we closed the market right about here on that blue line, which is where we are right now. So over the past 24 hours, Bitcoin hasn't moved. We're in this about, give or take a few $100, but we're about where we were 24 hours ago. A wild swing, you know. We actually went up before we went down. We went up to 39,224 before falling. Well, and I guess that would be a 10% fall from that high going into the yellow box, and then finally bottoming out this morning at about 12.5%. So that's a pretty big fall. So hopefully you were able to buy the dip there. I think that was definitely a good area to do so. All right, let's pop back over to the daily chart here for Bitcoin and all these crazy, crazy lines. Oh my goodness. All right. So here we are with Bitcoin. We are right here at 38,092, right there. So Bitcoin on the daily chart here, over the past 4 days, Bitcoin has been relatively steady, I'll call it, right? We've had the swings, the 10, 12% swings down and up, but overall, we're staying in a relatively tight range, minus the wicks of the candles dipping an extra 10%. All right, Ethereum, ETH, USD, and then we'll get to Alibaba. Ethereum here is at 25.82 right now, and it had a wild swing as well. Where it's sitting right now, it actually swung higher than that today. I'm going to go in on the 5-minute chart again and look at this swing that Ethereum made today and over the past 24 hours. And we can see it there. All right, so we got the 24th, which is today. That's where we have the bottom and then the rally to the top. And then the 23rd, we have closing out right here, right above my head here. And we had a little rally yesterday evening, and then we get the news, and then it just falls, and then we had this big, massive fall. And if we measure the top right here to where it bottomed at, that was a 16.65% move. And then we have our reversal, really nice reversal here. Look at that volume selling too. That was a lot of selling pressure there. And then we have our rally, and we go to the high point That's about a 19.3% move, but then we come back down to where we settled out for right now, and that's a 12.3% rise just today in Ethereum. Okay, real quick. Now, before I do start talking about Alibaba, could you, and I know it's kind of late to be saying this, smash the like button, share this video, and click the first link in the description or the link in the live chat to get our top 10 stocks list and so much more. And if it's your first time watching, consider clicking that subscribe button. Thank you, my friends, for doing that. I greatly appreciate it. Okay, let's talk about BABA, right? BABA is the ticker symbol. Now, this is a Chinese stock, and I typically stay away from those type of stocks. I do not own any Chinese stocks, no Neos, no Babas, no JD.coms, none of them right now. And looking here at Alibaba, this has just been an incredible fall for them. Let's go to the daily chart. That was still the 5-minute chart. There we go. And we can see this very defined trading channel as it's been going and down and down and down. We've got a peak here. October, it looks like October the 27th would be that peak. And we've got a high, and this is October 27th, 2020, not last year. October 27th, 2020 is the high, and it looks like it's at $319.32. Now, our 52-week high is $245.69. So, one thing to point out there just for newer investors, the 52-week high that you'll see always referenced and mentioned doesn't necessarily mean that's the all-time high of a stock. It's just the highest point a stock has been in the last 52 weeks. And that 52 weeks is constantly moving, right? Okay. So now that we got that out of the way, this has been a massive decline. Now, today, even though Alibaba ended the day down 0.7%, it's down another percent in after hours. So there's more selling in after hours than there was during the regular session today. But Alibaba has been facing selling pressure. There's nothing hiding that. And even more selling pressure after it posted its weakest quarterly growth rate since going public in 2014 by a wide margin. Now, regulatory crackdowns by the Chinese government may have initially sparked elevated concerns among investors, but a slowdown in sales across e-commerce and cloud computing has created a snowball effect, sending shares down about 65% from their all-time highs reached again in October of 2020, and over 55% in just the past year. Revenues in Q3 not only missed estimates, but they climbed just 9.7% year over year. This single-digit quarterly growth rate was by far Alibaba's lightest since going public in 2014. Since its 2014 IPO, it has never seen rates dip below 20% over that entire period until now. Also, even though growth jumped a healthy 36.9% in the same quarter a year ago, Alibaba had little trouble delivering about 30% growth in Q2 and Q1, despite lapping growth rates of 30% in those quarters. The lackluster sales growth, it stems from multiple factors. For one, China's economy is still struggling from the pandemic. They haven't bounced back yet. and total retail spending rose just 3% year over year in the quarter, a deceleration from the prior quarter. So it's not only not recovering at a fast rate, but it's slowing down. The sour economy drove domestic commerce sales of only 7% year over year, and single digit gross merchant volume, or GMV, that growth as well. Meanwhile, international sales performed much better, growing 18%, and cloud growth was a mild 20% year over year as overseas demand fell. By comparison, cloud revenue grew by 33% in Q2 and 29% in Q1. Alibaba Cloud Service were already impacted in December after Chinese regulators found a cybersecurity vulnerability. With overseas demand slowing, Alibaba's cloud segment may continue to demonstrate weakness going forward. Now, a standout in the quarter came from annual active consumers, or AACs, reaching 1.28 billion globally, translating into 43 million net ads. That's not too bad. I guess we can call that a highlight, right? Now, in China, AACs were up 3% quarter over quarter to 979 million, setting Alibaba on track to reach 1 billion AACs in China by the end of fiscal year 22. As a result, Alibaba noted that it is shifting its focus from new user acquisition to user retention and average revenue per user growth. That's a good thing. Looking ahead, Alibaba did not provide formal guidance, which is not easing growth concerns. Its commentary surrounding its near term outlook was also vague. Alibaba stated that it expects China commerce GMV to remain resilient in cloud and international commerce to exhibit strong growth. We'll have to see whether what they're predicting comes true or not because the numbers don't back it up. Overall, Alibaba's troubles continued to mostly go unabated in Q3, with softening commerce and cloud revenues driving further selling pressure. Although Alibaba has been impacted by its government's investigations surrounding anti monopolistic practices, so has most of the other Chinese tech sector companies. Despite this, though, Alibaba's main rival, JD.com, and just real quick, I'm going to put an overlay here of JD.com. Okay, this is what JD.com, the orange line, looks like compared to Alibaba's stock movements. You can see that going back to 2020, April, both companies rallied. Alibaba stopped in October. JD.com continued to rally until the middle of February 2021. Then JD.com had a little more forceful downturn, but Alibaba had already been in a downward turn, right? So this difference right here is about 75%. So JD.com has performed better, but Alibaba, it's getting hurt more, you could say, as the opposite. So why hasn't JD.com faced the same magnitude of selling? I don't know. Its shares have declined less than 30% over the past year. Now, JD's valuation of 7 times forward earnings is more attractive relative to Alibaba's 13 times forward earnings. which may factor into its less pronounced decline. Still, though, given Alibaba's weak Q3 results, JD.com could see similar figures when it reports Q3 earnings on March 10th. Well, that's what I think about Alibaba's dismal earnings report, to put it mildly. But what do you think about it? Have you gone through the numbers yet yourself? Let me know in the comments below if you think. Um, sorry, I just noticed a comment in the comments, and it just took my attention away. When I was typing in the ticker symbol at the beginning, um, over Generac, I typed it into the comments. So there you go, a ticker symbol there for you. All right, that's all I wanted to talk about today. So if you did find this video to be helpful, informative, or actionable, that's the big word, I think, then click the like button, grab the URL, and share this video wherever you can, and click the first link in the description to get our top 10 stocks list and so much more. And if it's your first time watching, consider clicking that subscribe button. All right, ladies and gentlemen, thank you so very much for joining me today. I'll see you tomorrow around 5:30 p.m. Eastern after the market's closed. All right, thank you. Have a good night. See you in the next video. Bye-bye.